Hi guys, Kat here with US Global Investors. Welcome back to part 2 of our video series, How to Invest, a Beginner's Guide. In our first video, we talked about how to start your investment journey with a goal in mind. Did you write one down yet? Great! Today, we're focusing on what's known as risk tolerance. As you may already know, investing does not come without some risk. So what is risk tolerance? It's exactly what it sounds like. How much risk you feel comfortable taking with your money. Or better yet, how much of a loss you are prepared to handle should it happen. In most cases, a 25-year-old is going to have a much different risk tolerance than someone who is 65 years old. Younger investors generally have higher risk tolerance. Why? Because they have a longer time horizon to ride out the bumps and market volatility. They may have just started their career and they're looking ahead years or even decades before retirement. If the market drops, there could still be time to recoup their losses. Older investors, on the other hand, generally have lower risk tolerance. Retirement may be coming up soon. Investors in this age bracket may be more inclined to park their money in fixed income instruments like government bonds, which historically have been less volatile than stocks. Bonds issued by state and local governments, known as municipal or muni bonds, can even generate income that's tax-free at the federal level. But age isn't the only factor here. Annual household income, the size of your portfolio, and your own personal comfort level can all come into play. By knowing your risk tolerance, you can better invest to suit your goals. In our next video, we'll go over a handful of ways to invest, some conservative and others a bit more aggressive. To be notified when we post a new video in this ongoing series, make sure to like this video and subscribe to our channel below. You can also learn more at usfunds.com. Happy investing!